Rich, thank you for joining me today as we talk about current events and you bring us up to speed what's going on with gold and the GDP and the Fed.
Well, there's a lot going on, and there's a lot that's going to go on, Charlotte, between now and the end of the year. And I'm always glad to be with you and share some thoughts. Hopefully, it helps some people out. Last week, on the 27th, we got third quarter GDP numbers out, and a lot of the folks were trying to put a positive spin on that. It was positive, right? So that's the positive spin, I guess. It was 0.6%. It was very barely positive, and the headlines that came out were we were on a pace for 2.6% growth for the year. Well, the only problem with that is that's if we have 4 quarters of that type of growth, and the first 2 quarters were flat and negative, so that's kind of a wash. We're on a pace for basically no growth right now this year, depending on what happens in the fourth quarter. Right on the heels of that, this week, the Federal Open Market Committee meeting is going on. Now, we're doing this just a couple days ahead of time, so we don't have the benefit of knowing what the Fed will do on Wednesday this week. But, when people view this, they'll have already gotten the result. I fully expect them to raise rates another 75 basis points here. I don't expect they're going to pause or pivot just yet. And I do fully expect them to do so again, another 75 basis points in December at the last meeting of the year. And that would bring us up to, if my math's right, somewhere around 4.25%, 4.5%, something like that. And I think that's the point where we may start looking at the Fed to potentially pause and not start going the other direction. Give it a little time to see what their interest rate increases have done to the economy. Personally, my thoughts. I don't think it's anywhere near enough. I mean, inflation is still at 40-year highs, up above 8%. That is not going to put a dent in inflation. It's not going to corral it. It could let it continue to run even further, especially if they pause or pivot, God forbid.
And for people directly, how is it going to impact them when the Fed raises the rates?
Yeah, so I think temporarily what we'll see is, well, when they raise the rates, we're going to continue to see what we've been seeing, which is volatility in the marketplace. So you're going to see the stock market on a little bit of news and hope and a glimmer of faith that, maybe the Fed's going to pause or pivot, that you'll see the stock markets rally again, like we have seen over the past week or so. And every time that word comes out definitively that they're not going to pause or pivot, you'll see it turn around and go the other direction. And that just means volatility with, I think, kind of a bias toward the downside. So we're still in this environment, which if it's stagflation, great. If it's almost stagflation, great. It's still the environment where your assets are falling down in value, and everything you need to survive in this world is going up in price and costing you more. It's still the worst case scenario. Add to it volatility and those violent mood swings in the markets. And I still think it's a very unsettled time for investors. And my thoughts on that. Make sure you have your savings tied up. Don't make any rash, major life-changing decisions. Take some of that savings and put it into real assets like gold, real estate, oil, agriculture. Buy the things right now with a strong dollar that everyone needs to survive.
A great suggestion. And I think there's a lot of fear out there right now and a lot of fear mongering going on. So you gave us some suggestions on what people can do, put your money into things that people need in order to survive. So
no question, break through that fear, break through the paralyzation that comes with fear. I know a lot of people are scared right now, and they should be. I mean, it's a volatile market, but you can protect yourself, and we've talked about ways to do that. You don't have to fear it. You're not going it alone. We're all in this together. It's not going to be the end of the world as we know it. No way in heck is that going to come true. And there are things you can do to better yourself for the future and protect your assets. And some of that is just information. And there's a great opportunity to get current, updated information from a whole host of experts and specialists very soon in Vegas.
Yes, and that would be at President's Week.
Yes.
Yes.
I am looking forward to going there. I'm flying out on Friday. I'll be there for a full week, coming back Thursday the 17th. So I'll be out there on Veterans Day the 11th, a week from when this airs. And what a great lineup. I mean, Franco Harris, and he's going to talk about his success in business. You've got obviously Joel, Mike, Joel Nagel, Mike Cobb. You've got Porter Stansbury, Buck Seston, Egon Von Geyers, Erica. I mean, the list goes on. Kirk Chisholm, Paul Rosenberg. There's got to be what, 20, 30 speakers going to be out there, I think.
Well, and I think what's important for people to know about this, it's not a conference of 1,000 people.
Yes.
It's a small conference, it's an intimate conference, and they have a chance to speak to every presenter one-on-one if they, if they so choose. They have that time to really delve in and put a plan together.
I've been to a lot of conferences, Charlotte, and that is not always the case. You get a few minutes here or there at the booth. Maybe you can grab a drink with somebody on the side. Here, you're going to be immersed for 4 days, 5 days, whatever it is. And you will have that opportunity to spend quality time if you need to. You don't have to if you don't need it, but you have that opportunity with every single speaker there, and it's time well spent, in my opinion. I'm looking forward to getting back out there.
Excellent. Do you have a little closing remark for us today, Rich?
Yeah, just keep your chins up and keep smiling. It's all good. Your portfolio should do well if you take the steps to keep it well. Diversify your assets, hold some real assets. Again, don't make any wide sweeping changes. We will get through this. It's painful, and I think our politicians have made it so by overspending and forcing the Fed to increase the money supply and ratchet up inflation. And now they're trying to fight that beast. But we'll get through this. I promise you. Just keep a stiff upper lip and do the right things.